However, they are essentially criticizing Tesla for its inability to control not just the vehicle industry, but also the software market. And they do think with its cutting-edge electric cars and audacious future goals, Tesla has been causing waves in the automotive industry for years. Investors and customers alike seem to be drawn to Tesla, but is the stock undervalued? According to some experts, it is. The GF value, a special method for estimating a stock's intrinsic worth, indicates that Tesla has a far higher fair value than the share price at this time. What does this signify? It implies that there may be a hidden gem in Tesla's stock. Tesla can be a smart choice if you're searching for an investment with the potential to yield large returns. However, it's crucial to conduct research before making an investment. Take into account Tesla's growth potential, profitability, and financial stability. Recall that there is no assurance that the price of Tesla's shares will stay high. Peeling back the layers of invention and investment, we're going to dig headfirst into the exciting world of Tesla today and pose the crucial question, is Tesla's value genuinely in the fast lane to success, or are there potential obstacles ahead? Fasten your seatbelts. For this in-depth guide, we'll analyze every aspect of Tesla, covering its fascinating history, current state, and future potential. We have everything prepared for you, from compelling financial insights to mind-blowing tech advances. To get your daily fix of information on everything Tesla, don't forget to hit the like button and subscribe to Tesla Stock News before we set out on our thrilling adventure. Let's start this video right now. 2010 saw Tesla go public with a $1.7 billion market valuation. In its early years, the company's valuation varied greatly, peaking at $28.6 billion in 2013 and then reverting to $2.2 billion in 2015. Tesla started to generate a profit in 2016, and the company's value increased gradually after that. In 2017, $50 billion was the company's market valuation. In 2019, $100 billion, and in 2020, $500 billion. On January 3rd, 2022, Tesla's valuation reached a height of $1.2 trillion, making it the most valuable car company globally. But since then, Tesla's market capitalization has dropped by almost 65%, and it is currently trading at $777 billion. Tesla's history of unstable valuation has been influenced by a number of factors. 1. The company's audacious future plans and objectives. Tesla has set high standards for itself, including obtaining fully autonomous driving and bringing electric vehicles within the reach of the general public. Although these objectives have thrilled investors, they have also increased Tesla's valuation's vulnerability to mood fluctuations. 2. Tesla's reliance on the Model 3 as its sole product. The majority of Tesla's income comes from the Model 3, which is also the company's best-selling vehicle. Because of this, Tesla is susceptible to shifts in the market for the Model 3. 3. The production issues facing the company. Due to its inability to reach manufacturing goals, Tesla has experienced delays and cancellations, which has dissatisfied investors. 4. Elon Musk's contentious remarks and public image. Elon Musk is the CEO of Tesla and a well-known individual. He has said a number of contentious things, like using marijuana during a live webcast. These claims have occasionally tarnished Tesla's brand and increased volatility in the company's valuation. Tesla remains the most valuable car maker in the world despite its history of unstable valuations. Being a global leader in electric vehicles, the company is well positioned to gain from the rising demand for EVs. However, as investors balance the company's long-term potential against its immediate hurdles, Tesla's price is expected to remain volatile in the years to come. Experts claim that the company's valuation is low. As of September 4th, 2023, the Tesla Inc. stock chart shows a daily decline of minus 5.06% and a 3-month increase of 18.07%. At $3.53, earnings per share are calculated. However, the crucial query looms large like a congenial paradox: is Tesla's stock riding the waves of undervaluation? We're going to dig deep into Tesla's valuing universe in this video in an attempt to find some answers. Imagine this: born in 2003, Tesla resides in the bright streets of Palo Alto, California. Its objective? Nothing less than creating electric cars to electrify the entire world. Folks, that's not all. They also play the solar game, providing power through panels and stylish solar roofs, as well as batteries for comfortable storage in residences and commercial buildings. Oh, and did I also mention that they have a big assortment of car models? They delivered more than 1.3 million cars globally in 2022 with pride. This is when things start to get interesting. Tesla is a major player in the market with a market valuation of an astounding $777.70 billion based on its current share price of $245.01. But there's more, so hang on to those charging cables. Tesla's fair value has been determined to be a tasty $455.84 for share by the GF value, which is similar to a secret sauce for determining a stock's genuine worth. That is a hint that Tesla's stock could be the market's undiscovered treasure. Ever wonder how analysts determine a stock's genuine value, like in the case of Tesla's E? That's where the GF value enters the picture, and in this video we'll go over that as well. What then is the GF value precisely? It is comparable to a formula that is not so secret. It's a novel approach to determining the intrinsic value of a stock. This impressive figure is determined by combining historical trade data with an internal adjustment factor that takes into account the company's past performance, growth, and future outlook. The interesting element is that the stock's present price is much over the GF value line, which is equivalent to overpaying for an unneeded designer label. Put another way, it's overpriced, and the profits in the future might not be as thrilling. Conversely, it's like finding a hidden gem at a garage sale when the stock price is securely below the GF value line. It's underappreciated, and you know what? This could imply that, given the company's growth, future returns have the potential to be much far better than anticipated. Speaking to Tesla, our star of the day, it appears that the stock of this exciting business could be one of those undiscovered treasures. The mathematics are telling us that it's way undervalued, suggesting that in California, the place where it all started, its long-term returns could just be brighter than the sun. It's similar to checking to verify sure everything is functioning properly under the hood of your car before making an investment. Therefore, you should research a company's financial standing before investing in one like Tesla. Consider it as ensuring your travel partner is prepared for the voyage ahead. Two important metrics to consider when assessing this are the interest coverage and the cash-to-debt ratio. What then do the figures tell us? Not only is Tesla's financial situation excellent, but it's comparable to having a strong financial safety net. With a 3.97 cash-to-debt ratio, Tesla performs better than about 80% of its rivals in the auto and component industries. This ratio effectively shows how well the business can pay its debts and whether there will be unanticipated financial difficulties. To put it another way, imagine it like keeping some spare cash in your wallet for unforeseen costs that life may present. It gives you security and peace of mind to know you have that cash buffer. In Tesla's instance, a high cash-to-debt ratio shows that the company is confidently positioned to ride out any financial turbulence and keep moving forward with their big plans. For investors and enthusiasts alike, it's a comforting indication of the stability and robustness of the business's financial condition. Overall, Tesla receives a strong 9 out of 10 for financial strength. Let's now discuss profitability, which is similar to evaluating the performance of your favorite bakery. A successful bakery must be producing delicious goods, right? Well, for 3 of the last 10 years, Tesla has been making money. They made an astounding $94 billion in sales and $3.53 3 share in just the previous 12 months. In comparison, their operational margin, which is comparable to the profit margin of a bakery, is higher than that of almost 88% of other businesses in the same sector. That bake-off looks very nice. Hold on to your hats, though, for this is only the beginning of Tesla's incredible tale. Growth is the stunning conclusion of this story, not simply a small side story. Picture your backyard favorite tree, the one that appears to reach for the stars and become stronger and higher every year growing. Now imagine Tesla in a similar situation. It has been on an absolutely astounding rising trajectory. Tesla's rise over the previous 3 years has been analogous to that of that majestic tree. And it is a growth story that has distinguished them in the automotive and technology sectors. Over this time, their yearly revenue growth has averaged a strong 36.4%, which puts them ahead of almost 94% of their industry competitors. Take a moment to consider that. They are dominating the great majority of businesses in an industry renowned for its intense rivalry. However, the tale does not end there. Tesla's performance is simply phenomenal in terms of EBIT growth. In this field, their 3-year average growth rate is an astounding 83.9%. To put it into perspective, this rate is higher than that of approximately 97% of other businesses in the same sector. Therefore, even though we're frequently enthralled by the svelte designs of Tesla's electric cars and the groundbreaking developments in sustainable energy, what really cemented the company's standing as a dominant force in the business world is the incredible growth narrative that has been taking place behind the scenes. Hey, we haven't finished yet. We're also exploring a traditional financial competition in this video, ROIC against WACC. Consider the process of evaluating a company's profitability as a pleasant game. The return on invested capital, or ROIC, is comparable to gauging how skillfully a baker transforms eggs, flour, and sugar into delicious pastries. It reveals to us the effectiveness with which a business turns the capital invested in it into cash flow. The weighted average cost of capital, or WACC, is located on the other side of the ring. Similar to the interest on your credit card, this is the average interest rate that a business projected to pay to fund its assets. This is where it gets interesting. If the ROIC is outpacing the WACC and demonstrating its financial strength, it's equivalent to claiming that the baker's cookies are flying off the shelves. The business is generating wealth for its owners. In Tesla's case, the data indicates that their ROIC for the previous 12 months was a strong 24.6%. In the meantime, the WACC is 19.38%. This indicates that Tesla is producing value that extends beyond simply icing the financial cake by efficiently using its dough. When all is said and done, it makes for an engaging narrative. With a combination of strong financials, respectable profitability, and growth that exceeds most of its competitors in the auto and parts sectors, Tesla's stock looks like an alluring investment. In light of this, we would like to acknowledge Tesla as a possible jewel on the stock market stage as we end off our video. That concludes our in-depth analysis of Tesla's worth and potential future developments for this fascinating business. We've discussed Tesla's highlights, possible drawbacks, and constantly changing environment. It's time for your opinions now. What do you think about the valuation of Tesla? Do you think it will succeed in the future, or do you see some obstacles? We'd love to hear your thoughts, so please share them in the comments section below. Please remember to hit the like button to show your support and subscribe to Tesla Stock News if you've appreciated this in-depth look into Tesla's universe and want to stay on top of the stock and tech industry trends. We are motivated to provide you with even more thrilling stuff by your support. I'm grateful.